Welcome back to the 73rd edition of NVIDIA Saves the Markets. Oops, wrong video. Welcome back to the first edition of NVIDIA Crashes the Markets. It's probably not fair to say that either, but NVIDIA's over 2% decline today definitely does not help, especially when NVIDIA was up over 4% in pre-market. Just judging off of that, this took Wall Street by a big surprise today. Now, tomorrow, did you know, is the world's largest option expiration in the history of option. Now, I'm going to give you a rundown of what to expect coming tomorrow, but most importantly, what to expect next week. We are also going to be going over Tesla's stock and everything you need to know about our favorite company. So, sit back, relax, grab yourself a brew. Well, my Tesla tequila's not here, and I'm not opening this one. So, I don't have nothing. But sit back, relax, enjoy the show. But first, let me know down below in the comment section if any of you guys have gotten your new Tesla tequila yet, because I still have not. And when I got the hats, it didn't take long to get them. So maybe, I guess, the tequila coming from Mexico could take a little longer. That would make sense. So what happened today was there really isn't a clear catalyst besides the data that we got this morning, which was your Philly Fed data. Business conditions plummeted, prices paid rose, and initial jobless claims also rose, really confirming this uptrend in initial jobless claims and weakness in the labor market. So I guess you could say those were the real only catalyst we had today, including some Fed officials like Fed Kashgari that said inflation could take 1 to 2 years to come down to 2%. Not exactly comforting words. You also had the Swiss National Bank that came out today and did a surprise rate cut. Anytime you get central banks doing rate cuts, it doesn't tend to be good for markets, but especially not surprise rate cuts. That's usually a sign that things are going to get worse in that country. Like if Jerome Powell came out tonight and cut rates, yeah, markets would be down probably 10% tomorrow. Surprise rate cuts, no bueno. They're never good. And the confluence of all of this information is causing stocks to sell off, a little bit of a defensive rotation into more staple companies like your Dow Jones Industrial Average that is up almost 0.5% today. The S&P is down 0.36%, the Nasdaq down 0.79%, the Russell 2000 down 0.37%. Take a look at the VIX, up almost 9% today. That means there's a lot of people that are feeling kind of bearish out there. When the VIX is up, when the VIX is green, typically that happens on red days. Lately, the VIX has been green on some green days as well, which has been quite alarming to me. But the VIX goes higher when there's more puts being bought on the S&P than calls. And this week's option expiration is the largest in history at $5.1 trillion. Comprising this, you have SPX options that expire in the morning at $2.9 trillion. Non-SPX index options that expire at $185 billion. They expire in the AM as well. In the afternoon, you have SPY, $280 billion of options there. That's typically what we use to look at for the S&P 500, the SPY index, right? You should be familiar with that. The SPX PM option expiration is $430 billion, non-SPY ETF $455 billion, and single stock options worth $870 billion. And I would argue a good chunk of that's probably your friend NVIDIA. So it doesn't surprise me why NVIDIA pulled a 7-8% switcheroo today. The stocks run a lot. It's due for a correction, and I think some people are getting ahead of that. But you can see under this post, Andrew Fisher, portfolio manager at SIO, says high gamma will make the market close flat for most. So what that means is these options are already hedged for in either direction. So until options really start to be closed out in mass, assigned or whatnot, you're not going to get much of a reaction. What tends to move markets most in terms of options is if you get a big influx of puts, a big influx of calls. That starts the process of gamma and delta hedging, and that's what can send markets up, send markets down, kind of like a short squeeze, right? For a stock like even a Tesla that has a lot of option activity all of the time. Calls, puts, it's a very active options chain. It doesn't tend to do much, you know, in either direction. Well, if you all of a sudden see a bunch of calls go onto Tesla's options chain, the stock's probably going to pop at least a little bit. And vice versa, obviously, to the put side. But what I've found over my years of investing in the markets, again, I started investing 2016, more active in 2017, full-time 2018. I have noticed in the week of a large option expiration, a quad witching or triple witching week, that only happens, you know, once a quarter, so it doesn't happen too often, they don't tend to be very volatile. They tend to be pretty flat weeks overall, but it's actually the next following week afterwards that tends to get all of the volatility. One good reason for that would be the $5 trillion, in this case, expiring Friday, gets repositioned into a bunch of calls, into a bunch of puts. So I've actually noticed it's better to take a look at next week's option expiration before that week actually starts, like today. Because however institutional investors and investors in general are positioning right now for next week is a pretty good sign of how that $5 trillion is going to position coming tomorrow and coming on Monday. And I gotta say, it looks like investors are positioning for some kind of big reset coming next week. If you take a look at calls of the open interest, so these are contracts bought and held in people's brokerage accounts, you have 12.7% open interest calls, 87.3% open interest puts. That means there's almost 7 times as many puts for next Friday's option expiration than calls. That is the expiration of June 28th. If you take a look at the interesting flow sentiment over here on Ortex, you have 27 different trades today for the S&P 500, the SPX or SPY, totaling $4.24 million with a positive order value of 46%. So just taking a look at the options chain that we can see right now, it looks like someone is setting up for a pretty rough next week. Let's be honest though, this was far overdue, and if we wanted more upside, this almost needed to happen. And well, now that we've gotten this reset with the Nasdaq's, well, Nasdaq 100, QQQ's RSI at 73, no longer at 82 following today, this either does set you up for a lot more downside or potentially just a period of consolidation and then more upside from here. You're still overbought on the Nasdaq, but you have reset that quite a bit following today's drop. Same is true with Nvidia. Nvidia was long overdue for some kind of drop, and this round trip move today from 141 down to 130 was definitely overdue as well. Again, I'm a little concerned about the markets just in general here. So we'll see if this does lead into something larger. But I really think at this moment in time, there's so much positivity, there's so much upside momentum and really upside bias in our markets. You probably need to get some bit of big data that is really bad, something big to really change that sentiment. People just going on CNBC talking about a correction could instinctively cause some downside, but I only think that goes so far until something material actually changes. And again, if we take a look at next week's option expiration, which we did, having 7 times as many puts than calls could set you up for a kind of momentum reversal throughout next week. We will, of course, get data next week that will be very important. Also worth mentioning that July kicks off the strongest 10-day period of the year for the S&P 500, with on average and median returns of 1.54% and 1.91% respectively. So the first 2 weeks or so of July tend to be one of the best period of time for markets. A lot of that has to do with low liquidity, tends to be low volatility, not a whole lot going on in July. Overall, a sense of optimism heading into the 4th of July. And typically when there's low volume, there's low volatility. When there's low volatility, then stocks generally like to move higher. So there's definitely some sort of seasonal trend that does make July, the first half of July, pretty bullish. Just to make matters that much more confusing, job growth was overstated by more than 770,000 last year. Put differently, about 1 in every 4 jobs that was supposedly added last year never existed. That's like completely eliminating all of the jobs gained in the 3 whole months of 2023. People don't have jobs, Emerson. You gonna put them to work? It's also being reported that, quote, dumb money just went all in on stocks. This is historically a dangerous setup. Over the last 50 trading days, investors have grown increasingly bullish on the market. This optimism has reached levels of complacency similar to December of 2021, just months before the market began a 25% drop. The AI bull-bear ratio is a simple survey that asks investors if they are bullish or bearish. Since 2007, we've seen this ratio fluctuate, often peaking when the market is about to correct. When many investors are bullish, smart money gets defensive, scaling back their exposure. Conversely, when investors are pessimistic, smart money sees discount buying opportunities. We saw this in 2022 when the S&P 500 dropped about 25% from its all-time high. Investor sentiment became extremely pessimistic. In June and September of 2022, we advised our clients to buy stocks for the long term, as such levels wouldn't be seen again for a while. Many thought we were out of our minds. Now with the S&P 500 rallying 50% from its September low, investor sentiment has shifted from extreme pessimism to extreme optimism. Is it time to be contrarian again and consider scaling back our market exposure? A powerful risk-on indicator is the gold to silver ratio, which recently triggered a rare signal. The breakdown of this ratio with silver outperforming gold suggests precious metals investors are confident about the markets, and this tends to happen right before there's you can see from the chart. This CNBC contributor and a reporter with the Wall Street Journal, Gunjan Benjiri, says, where did all the bears go? Short interest tied to SPY and QQQ is hovering at the lowest levels since at least 2018, according to JP Morgan. With the short interest very low for the QQQ, SPY is right behind, but really ever since 2024 started, it has been a downward slide. And inevitably, when you're this bullish and people, like literally everyone is bullish, you're going to get an upset correction to the downside. And this is short interest tied to the Magnificent Seven stocks, which, believe it or not, has actually been increasing in recent weeks. Barchar over on X shared this image, this chart, and says, stock insiders to the market. See ya. And yeah, that's a lot of red in the buy and sell transactions over the past 60 days. Very little buying and lots of selling. Buyer conditions for U.S. consumers have declined to an all-time low in June of 2024. The index of buying conditions is now at 27 points below the previous all-time low recorded in the 1980s. This was when 30-year mortgage rates were between 12 and 19% on average compared to 7% currently, and that's because the price of homes has went so much higher. This is on record the most affordable time to buy a home. Now tomorrow we will get important data as well, coming out at 8:45 in the morning Eastern Standard Time. Well, I believe it's actually 9:45 in the morning Eastern Standard Time. The S&P Global Composite PMI, you're expecting all of these numbers to actually move down a little bit. S&P Global Manufacturing PMI is expected to actually move up about 2 points from 51.3 to 51.5, and the S&P Global Services PMI is expected to move down about 8 points from 54.8 to 54. Markets are going to be paying very close attention to that services PMI. Also, the CB leading index month over month, that's a pretty important data point as well. You'll also get existing home sales for the month of May and existing home sales month over month. The latest AI investor sentiment survey that came out yesterday shows bullish investors at 44.4%, which is higher than historical averages of 37.5%. Actually down a little bit from last week. Bearish investors dropped a lot from last week, from 25.7% to 22.5%, so over 3.3 percentage points there. But neutral investors jumped quite a bit, from 29.7% to 33.1%. And as I reported in the last video, 10-year Treasury yields rose over 4 basis points today. A final look at the option activity today for Tesla is quite positive from big money. You have 9 orders totaling $3.34 million with a positive order value of 94%. Looking at this week's expiration, you did have volume today of almost 62% calls, 38% puts. Looking at next week, you have open interest of 76.3% calls and 23.7% puts. So investors pretty dang bullish on Tesla here. You can also see you have return shares of 639,000 and borrowed shares of 3.55 million. Looks like about 3 million shares were sold short today in Tesla stock. Considering Tesla's over 2% decline, that would make a lot of sense. On a technical basis, Tesla did not hold above this trend line, which was around 183. That's preferably what we wanted to see, but there's not much we can do when there's broad market weakness out there. Tesla's just going to amplify whatever the markets are giving it. Now, I do think July 2nd is going to be a really good delivery number for Tesla. I'm optimistic there. I think that can be an upside positive catalyst. And I do think earnings overall will be a good catalyst, as margins are likely to come in better than expected, in my personal opinion. Now, nonetheless, really the big level to watch for is around 178. That's where your 20-day moving average and your 100-day moving average have converged. So if you break under 178, you're going to break under both those moving averages, and that's where things start to look pretty bad in the short term for Tesla. You obviously have your 50-day moving average down here at about 173.37. So those are the important levels for the downside to watch. Again, that 183 level's a big level to hold. Hopefully as support coming tomorrow, that would still be a good sign. But inevitably, we want to get above that 188 level. I don't think, unfortunately, that is going to happen until at least July 2nd. Tesla's RSI is at 52.41, and you can see the MACD is still positive, but just starting to trend sideways here. And I do think the silver lining to Tesla's expectations are low. There's a lot of bad news priced into Tesla. Not the same is true for the broader markets. There's a lot of good news priced in. Expectations are high. In fact, they're like one of the highest on record. There is no recession priced in. There is no slowdown of growth priced in. AI is going to continue to fuel massive demand for NVIDIA products. And, you know, the hyperscalers, the real world AI providers are going to start seeing results in the next 1 to 2 quarters. We all know that's not true. We all know AI expectations are too high, and there will be a correction there. Now, Tesla will likely follow suit in any kind of correction, but I think with the expectations this low, Tesla, if it continues to fall, if it does go lower into the 150s, 160s, 140s again, who knows? Could go lower if the Fed makes an error and the economy weakens further or faster than expected. I think that's just an even better buying opportunity. As long as you know the company's solid, you understand these things, it really doesn't matter what Wall Street thinks. Over time, Wall Street will come to realize, oh, shoot, Tesla's actually, margins are improving. Deliveries are going to get better as the Fed cuts rates, and as the markets panic about that, markets will inevitably realize Tesla stands to benefit from all these things. Tesla's not going anywhere. I mean, it's as simple as that. Tesla, at this point, I would argue, is undervalued based on expectations and what Tesla will deliver. So let me know what you think about this information down below in the comment section. That data coming out tomorrow at about 9:45 in the morning will be very important, so keep your eyes on it. Again, let me know down below in the comment section as well. Have you gotten your new Mazul Tesla tequila? So thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.